So then, ladies and gentlemen, today I want to proceed with this net present value stuff that we were doing yesterday. And today, unlike the other days, I would want to use a whiteboard. Does it mean that you guys start now writing your answers on a paper? No BDA student writes like that. All BDA students, computations, they shall always be doing all their computations on an Excel worksheet. It's only myself who at times, in this case here, for purpose of demonstrations, I can use a whiteboard. And then after some time, I go back to my laptop, try to showcase a few things here and there. Great. So then, ladies and gentlemen, here we have some book, which I promised to send you yesterday, which I'll be able to send still. It's called a tracker. This question is called tracker. Tracker is question number 40. Tracker is question number 40. 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 It is here. Tracker Company Limited. Tracker Company Limited. This one here. Tracker Company Limited. Tracker Company Limited. Let me know whether you guys are able to see it clearly. Are you guys able to see this question clearly? Tracker Company Limited. Tracker Company Limited. Are you able to see it clearly? Tracker Company Limited. Tracker Company Limited. Tracker Company Limited. Tracker Company Limited. So Tracker Company Limited. Tracker Company Limited. Thank you very much. So required. They want us to calculate the net present value of buying the new machine and a comment on your findings nearest 1,000. So the question that we were doing with you, ladies and gentlemen, yesterday, they had cash flows. They had cash flows. There is not a single day that CASNEB will ever give you cash flows direct. CASNEB would want you to derive. They'll give you selling price, they'll give you variable cost, etc. And then you should be able to get total cash flows yourself. If CASNEB, in this case here, was to give you cash flows directly for each year, then for sure they will not be in business. They'll not be in business. Let me not discuss about that too much, but the most important thing is that all of us must be able to derive cash flows ourselves, all of us. But good thing is that they give you straightforward information. So like now here, ladies and gentlemen, we are told here, Tracker Company plans to buy a new machine to meet expected demand for a new product T. This machine will cost $250,000 and will last for 4 years, at the end of which time it will be sold for $5,000. Tracker Company expects demand for the product T to be as follows. The selling price for product T is expected to be 12 per unit, and the variable cost of production is expected to be 7.8 per unit. Incremental annual fixed production overheads of 25,000 per year will be incurred. Selling price and cost are all in current price terms. Selling price and cost are expected to increase as follows. Other information, Tracker Company expects a real cost of capital to be 5.7%. and it pays tax at an annual rate of 30%, 1 year in arrears. It can claim tax allowable depreciation on a 25% reducing balance basis. General inflation is expected to be 5% per year. So, ladies and gentlemen, I remember what my finance teacher told me in those old days. That whenever you see real cost of capital, please, real cost of capital can never be used for discounting purposes. Here I can see one free mark, and it came in the BDA exam, last sitting but one. They gave students real cost of capital, and those students, in this case here, were able to use the real cost of capital, and they failed because we don't use the real cost of capital. We don't use the real cost of capital. Whenever you are given real cost of capital, you must change it to what we call the nominal cost of capital. You change it to what you call nominal cost of capital. So in this case here, change real cost of capital, change real cost of capital to, in this case here, what here? nominal cost of capital to nominal cost of capital using Fisher's equation. Using Fisher's equation, let me know whether you guys have been able to type this in your Excel sheet. Have you been able to type this? You are typing, remember, and know how to save your workbooks. Know how to save your workbooks. That's very important. You can save a workbook even by the date, etc., etc. It's very important for you to have all your workbooks by the end of that will be your notes. Those will be your notes. So let me know when you are able to finish typing. You are changing real cost of capital to nominal cost of capital using Fisher's equation. Ladies and gentlemen, that finance teacher told me, and he gave a very bad example, that even in these social life relationships, honestly, if, for example, a man, you are to decide in this case, you have to be very real. Can you get married if you decide to be very real? So in this case, this lady that you have nothing at the age of 27, you've got nothing. The only thing that you have is hope. You don't have even, you cannot marry. So anytime you see real, that is not something that in this case here can be attractive. You must change it to, you must embellish it. Yani uweke aromat. Upate what we call nominal cost of capital. And how do we get this nominal cost of capital? It's very easy. Using the Fisher's equation, we normally say 1 plus nominal equals 1 plus real into 1 plus inflation, general inflation. You just write this in one cell. You write this in one cell in Excel. You say 1 plus nominal equals 1 plus real into 1 plus I, where N stands for nominal cost of capital. Nominal cost of capital. We have R standing for real cost of capital. Real cost of capital. And then we have I standing for general inflation. Not specific. Don't go and pick inflation, for example, affecting prices alone. Affecting variable cost. No, we want the general inflation for an economy. General inflation for an economy. Great. So, ladies and gentlemen, if I were you, what would have I done? If I were you, what I would have done, I would have come here and made N the subject of the formula because I want nominal. Because I want nominal, then this nominal will be 1 plus R into 1 plus IE. This one has to cross over. When it crosses over, it becomes -1. When it crosses over, it becomes -1. Oye, nisikizeni. Sasa, ikiwa ni mimi wewe, naona nominal ndio natafuta hii sijui. But real cost of capital has been provided. Real cost of capital has been provided. What have they given me as the real cost of capital? Real cost of capital, these guys have given me for sure. When I say my real cost of capital, 5.7%. Real cost of capital is 5.7%. And also, they have given me the general inflation. They have given me the general inflation is here. General inflation is 5%. General inflation is 5%. General inflation is 5%. Sasa kumbukeni nyinyi, si cell moja umeandika R. Hii ni cell moja ya Excel. Umeandika R. Usikandike equals. Just go to the next cell. Go to the next cell there, and then you type there 5.7%. Alafu kuna hii cell ambayo umeandika I. Hiyo ni cell moja umeandika ka I ama inflation ndani. Another cell hapa sasa next cell. Unasema tab. You go to the next cell. Go to the next cell. This next cell say 5%. And then now come under, in this case here, right, in another cell. In another cell, you say N. Once you say N, go to another cell. Go to the next cell there. So this next cell is where I would want you to say equals first inside there. You say equals first. And then you say, if you wish, you can say open bracket. I hope you can see where the bracket is. I'm following this. You say 1 plus this one here. You pick this. You pick this. You say 1 plus, you tap on this cell, and then you close. And then you open again, you say 1 plus this 5%. This 5%, you close. And then you say minus 1. And then you say enter. You say enter. What will you be able to see in this case here coming there as n? What will you be able to see there coming as n? Abracadabra, they are not even getting this figure. All of them, they're not getting this figure really. They're not getting this figure. They're not getting this figure. They're not getting this figure. They are not getting this figure. Abracadabra. They're not getting this figure. Abracadabra. They're not getting this figure. Abracadabra. Let me just show them something. Hey! Here, check what I'm doing. So in this case here, remember I have the nominal is what I want. I have the real cost of capital, real cost of capital, real cost of capital, real cost of capital. This is what you guys, I'll not say equals, I'll simply say tab. So this tab, I'll be able to say 5.7%. And then they have given me the general inflation, the general inflation. So I have the general inflation, which they have given me as 5%. All right. And then I want, in this case here, to get my nominal. I want to get my nominal cost of capital. I want to get my nominal cost of capital. So this nominal cost of capital, ladies and gentlemen, how do I get it? Already I know the formula. So I will come here and say equals. I will come and open brackets here for the 1 plus r. So I'll say 1 plus r, which happens to be this, like that. I don't have to lock anything. I close, I open again, a bracket there, and then I say 1 plus the 5%. I close like that. I say minus 1. I may very easily get an error. So control enter. When I say control enter, I can see these errors. Even these guys, they want to correct this error for me, because in Excel you have to put a multiplication sign in between here. You have to put a multiplication sign in between here. So let me disallow that. Let me disallow that. And then I go back. I go back. Let me go back and start again. So, ladies and gentlemen, in this case here, this is what I would want to do. I want to get this nominal cost of capital. I will say equals, and then I open a bracket. I say 1 plus my real cost of capital. I say close. I say times in between. I open again. I say 1 plus. I come and pick the general inflation. I say like that. And then you say minus 1. And then I can say easily control what here, control enter, like that. So I'm getting this thing, which may be very ugly. If I want it to be a whole number, I can make it a whole number. I can reduce the decimal places. This is the place where you reduce the decimal places, this one here. I can reduce these to whatever decimal places I want. I can even put a whole number. But let us have this in 3 decimal places. And for us, we shall not do what this examiner wants us to, round off to dollars, thousands, really, as we are we are using Excel. We're not doing this thing manually, as we are not bothered with the numbers. So, ladies and gentlemen, up to here, are we together really? Up to here, are we together? Up to here, are we together? Are we together? Thank you so much. So that is the first thing that I expected you guys to get. So from there now we go to step number 2. So step number 2, again, I want to make use of my board. Okay. Great, great. So, ladies and gentlemen, remember we are doing net present value, isn't it? Net present value. And we haven't even started really. We haven't even started really. What we have done is simple arithmetic of getting, in this case here, the nominal cost of capital, because nominal cost of capital is what shall be used for purposes of what here discounting. The other thing that I would have done, which is basically a low-hanging fruit concept, is, ladies and gentlemen, the depreciation. Sorry. So now we are doing depreciation, of which they have told us that this machine was bought for 250,000 and it lasts for 4 years, at the end of which time it will be sold for 5,000. So then we have the cost here, 250, right? And then, ladies and gentlemen, at the end of the day, what have they told us? We need a column here for depreciation. So this is cost, like that, depreciation. So listen to me very well. Have they given me the depreciation? Have they given me the depreciation amount, depreciation rate? Oh, yes, they have done that. They have told me here, at the end of which it will be sold for 5,000. Tracker company expects demand. No, that one. Yeah. It can claim tax allowable depreciation on a 25% reducing balance basis. General inflation is expected. So the thing is this, that it can claim tax allowable depreciation on a 25% reducing balance basis. I love this. So let's move here slowly. So then I would want somebody in this case here to go ahead and give me depreciation for year number 1. Depreciation for year number 1 is very easy. It is 25% of the initial cost. 25% of the initial cost. Can somebody give me this figure? 25% of the initial cost. 25% of the initial cost. 25% of the initial cost. Patrick, we shall divide those figures by 1,000. Our figures are in thousands. All of us, we are doing this thing in thousands. So you don't confuse. We are doing this thing in thousands. So then I'll write here 62.5. And then you go to year number 2. Year number 2, the rate of depreciation is going to be the same. The rate of depreciation shall be the same into, we have here what we call the reduced balance. So how do we get the reduced balance? I will take the initial cost minus what we lost in year 1, minus 62.5. And then you come and say equals. So according to Willy Velma, it is 46.875. You go to year number 3. Year number 3, I will talk of 25% of the reduced balance. Remember, we have got straight line depreciation, and then we have got a reducing balance depreciation method. This is reducing balance. So under this one, Patrick has already gotten a figure. So in this case here, minus 250, minus what we lost in year 1, minus what we have lost in year 2 to get the reduced balance. 25% of that is the answer. 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 So I'm being given by Ruth that this answer is supposed to be 35.16. 35.16. So then, ladies and gentlemen, could you kindly give Mwalimu the depreciation rate for year number 4? Depreciation rate, not rate, but depreciation amount for year number 4. Now you are on your own. Depreciation for year number 4. 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 The worst mistake you can ever do in this life is to apply the percentage of depreciation in the last year. The last year, we don't apply that percentage. You are told when you are doing, in this case, and that is why you come to this paper after. This is an exit paper. You come to this paper after you've cleared all the other papers. You must have done taxation, all of you. And you are told that the last year, you normally book what we call a balancing figure. Balancing figure, a capital, if you can remember, balancing charge, those things. Those things. So in the last year, you have to be a bright person. In the last year, we are going to put something that is just balancing, the balancing figure. So then you have to give us here. We know, ladies and gentlemen, that each of these depreciations, when you add them for 4 years, they must be able to align with the total depreciation. They must align with the total depreciation here. We bought this machine for 250, you remember. And by the end of its useful life, this thing will be worth just 5,000. This thing will be worth 5,000. So meaning that over the 4 years, it has shed off 245. Remember, we bought it for 250, and we are told that by the end of its useful life, we are told here, by the end of its useful life, we can only sell it for 5,000. This machine will cost us 250 and last for 4 years, at the end of which it will be sold for 5. So, ladies and gentlemen, that I'm able to see straight away that we have the total depreciation. The total value lost by this machine is 245. 245. But fortunately, I know what was lost in year 1. I know what was lost in year 2. I know what was lost in year 3. So I can easily get what was lost in year 4 as a balancing figure, because I'll come and say it is 245 minus what we lost here, minus what we lost there, minus what we lost there, like that. So year number 4, it's a balancing charge. The last year, we don't apply the percentage. The last year, we don't apply the percentage. The last year, we don't apply the percentage. So then can somebody in this case here give me the depreciation? So I'm being given in this case here by this techno person does not follow instructions. Techno person does not follow instructions, and he's going to get into problems. We said all our figures, we're working them out in thousands. Don't write 250,000, write just 250 so we can walk together in this journey. Otherwise, you'll get yourself and then you'll start complaining that today I'm not following at all. Follow instructions. So in this case here, we have 100.465 like that. Listen. I don't like this method. This method you can easily confuse. The method that I like is this one. For year number 4, the method that always works for me. Year number 4, I'm not going to use the percentage. For year number 4, what I will do, I will start from where we began. We began when the asset was at 250, minus what we lost in year 1, minus what we lost in year 1, minus what we have lost in year 2, minus what we have lost in year 3. Because now I never used the percentage, there is something new that I have to introduce. I always remember that. But I have not used percentage. Then at the end of it, always deduct the scrap value. At the end of it, always deduct the scrap value. Can somebody do this and let us know whether we are getting the same figures? Let's know whether we are getting the same figures. Let's know whether we are getting the same figures. Great. 468. So in an exam, you guys, to be very honest, is there anybody who would have done this question this way? Is there anybody who would have done this question this way? Or rather, is there anybody who would have calculated this depreciation this way? Ama mungetupa mbao. Sema ukweli, sema tu ukweli. Sema ukweli. No. Ya, hapana. Alafu najua unfortunately sana sasa, hii ndio ubaya wa hii kitu. Ukikosea kama hii moja, although for BDA, they normally mark entries, They mark entries. Ingekuramba, isn't it? We shall overcome. Then now I will be able to go back to my Excel sheet, and then now I'll be able to do now the entire question now in Excel. Now all of us will be very happy. We shall overcome. I can see Lucy Aimba here. Lucy Aimba here. We shall overcome. 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 Great. Yeah. So there is a book which I would want to send up to you right now. This book, I need to send it to you right now. Just 1 minute. I sent to you the book. It's good to keep promises, so that when you have the book, then everything should be okay. When you have the book, everything should be okay. Great. Great. Just 2 minutes. So they attach the book here, so that as I do the question, you guys should be able to do it. But now there are a few things that I would want us to discuss as we wait for this gentleman to attach it there. There are a few things I would want us to discuss. Assuming, ladies and gentlemen, you are given price, price of say 10 here. And this happens to be times 0. And then in this case here, you have 1, right? So we have this 1, I can extend this up to maybe 8 like that. All right. And then they have told you that this price will grow by what year? They have told you the growth rates. They have told you that this price will grow by 3% per annum. Will grow by 3%, 3% per annum. Thank you very much. And then these guys now want you to get like end of year 1, what will be the price? End of year 1, what will be the price? So I would want you guys to write this schedule so that we can do this thing together. This is very interesting. End of year 1, remember this particular formula we used to use in primary school. We used to say amount equals principal times 1 plus R. 1 plus R. And then you raise this to power n. You raise this to power n. This is the working that we used to do some time back here. Very, very important, ladies and gentlemen, please listen. How will I be able to do this? I will come at the end of year 1. I'll be able to say equals, and then I pick the price. And because this price is going to be the same throughout, the principal is going to be the same throughout, I need to come and lock it. And then I say times. I say open bracket. Then I will say 1. I say plus 1 plus the rate. What do you know about this rate per month? It's gonna be constant. So I'll come and say F4. And then I close bracket. Then I'll be able to come and say here raised to. I'll come and say raised to this n. You see, n is power 1. This one here. And I'll not lock that because as I move along, I expect this thing to be the same, or rather to change from 1 to 2, 2 to 3, like that. Then I'll be able to say Control Enter. When I say like that, ladies and gentlemen, I'm okay. Now I can come and use the power of the angry rabbit. I'll be able to drag this thing like that. And I'm able to get my new prizes. I'm able to get my new prizes. I'm able to get my new prizes. Is there anybody who has been able to do that? Is there anybody who has been able to do that? And they got my figures before I repeat. Before I repeat, this is something that all of us should be able to really do very fast. And if they're not able to get it, then I should be able to repeat really very fast. Great. Life is good. Life is good. I can't see even a single person saying, yes, I've done it. Yes, I've done it. Karen, I'll repeat yes. I'll repeat yes. I'll repeat yes. But before I repeat, I would want to see whether there are about 10 people who have understood it. And then when I repeat, where do I get raised from the keyboard? Raised is on top of number 6. Kala kamshale kanakaa hivi. On top of number 6, kanakaa hivi. Hivi. On top of number 6. On top of number 6. I'm too fast. I'll be able to slow down. Remember at first when I teach. Done. OS done. Nani mwingine amefanya? Nani mwingine amefanya? Done. Okay. Any other person who has been able to do this? I'm waiting to see. I'm waiting to see. I'm waiting to see before I repeat, because I'll repeat many times. I'll repeat many times. I'll repeat many times. I'll repeat many times. I can't see comments there. So then let me repeat. So remember here, ladies and gentlemen, that the thing is, I will come here and repeat this very first. The thing is, the price at time 0 is given to us. So, and this price, you can see this price, the P here, is going to be constant throughout. So I will come and say here, the price, which is 10, but I have to lock it. So locking it is F4. Locking it is F4 like that. And then I should now be able to do what here to say times, like that. I open bracket. I say 1. I'm following this formula. Plus the rate. This rate is going to be constant every time. So I have to lock it like that. And then I'll come and close my bracket. And then my sister, who is saying I'm very first, there is a raised. I'll say shift number 6. Shift number 6. Raised to n is the time period. I'm here at number 1. Don't lock that number 1. Stay Control Enter. Once you get that, then you should be able to come and autofill. Put this angry rabbit in its corner, and then you drag this using a mouse pad. You're holding onto your mouse pad. You drag this up to number 8 like that, and then you'll be able to get your new prizes so nicely. So all of us now, I want to see how many guys have been able to do this really. How many of us now have been able to do this? Imagine utashika. Ukiwa na bidii kidogo tu, utashika. I'm 100% sure. I can promise you this. I can promise you this. You'll be so good at this. Utashika. So now I can see 6 students. They're dancing there. They're dancing there. N means time. Time. Tabitha, great. Nancy Kimathi, great. Great. Yes, Mercy, at least, great. I'm counting. Those are 12 now, right? 12 out of 145. I'm not doing very well. Big Vic. Big Vic is yes. Big Vic is yes. Rose Odundo, yes. Great. That's about now 21 to be precise. Thanks, Charles. Degwa, yes. Okay. So have you been able to get that book? Have you been able to get that book? Thanks, administrator. You know how to do this thing. You must answer a little bit. You must answer a little bit. Even myself today, once you understand the whole question, thanks, Yakubu. Yakubu, thanks. At least you came a bit late and now you've been able to steal the show. Thank you so much. That is what you want. Students, in this case, you arrive and they start fighting. Thank you so much. So then, ladies and gentlemen, have you been able to download that book? Have you been able to download the book? Thank you. Please go to question number 40. Please go to question number 40, Tracker Company. And then you share. I would want somebody who has that book, I would want you to share the book with us, because I don't want to keep on changing. Somebody who has the book, please. Where is the book? It has been uploaded on the chat section. Somebody can easily get it from this chat section, and then you send it to our WhatsApp group. You send it to our WhatsApp group. Screenshot. Okay, but I would want somebody I would want somebody to share it here, so that when you watch the video later, you'll be able to see the question. You could just say share screens. You know how to share screen. You guys are bright. You know how to share screen. Julie, somebody help Julie there. Somebody help Julie there. Patrick, I'm so sure if Patrick wanted to help this mwalimu tonight, Patrick would have done it very easily. Patrick would have done it very easily by sharing the screen, or any other student who has been able to go to question number 40. Please, administrator, if you've opened the book on your machine, can you share the book here? Can you share the book with us? Can you share the book with us? Can you share the book with us? Can you share that question with us? They have refused to share here. They have refused to. It's not about the whole book. I just want you to. Yes, thanks, Patrick. At least you've understood what I wanted. Thank you so much. It's Tracker Company. Are you able to maximize your screen? Are you able to maximize? Yeah, grab this comment, or rather, cancel the comment section. There is a comment section there that you can cancel easily. But I can see, oh, we shall overcome. We shall overcome. We shall overcome. Just move slowly. Open again. Open again. Go to question number 40. Great. Great. Go to question number 40. It's opening slowly. Great. Ah, that lady there, ACCA lady. Great lady. So question number 40. Just scroll, scroll. We are still far. Scroll, scroll, scroll. That's question 3. That is question number 15. So move on. That's question number 22. 30. So let's start going slowly. Start going slowly, a bit slow. Yes. Yes, we are almost there for more questions. So now we are talking of question number 40. Tracker Company. Thank you very much. So, ladies and gentlemen, let's copy this. Like now we have the demand. Demand is 35, 40, 50, 25. Let's copy that. So Patrick, stop sharing so that I can share mine. Patrick, stop sharing, and please be around so that I can always be. So in this case, ladies and gentlemen, I will come here and write my demand. The demand has been given. The demand has been given in the book. The demand has been given. So for year 1, we have for year 2, we have for year 3, we have for year 4, we have for year 5. Year 4. Now, I would want these figures here to start from 0. So I want to add some column. I want to add some column. I want to add some column. How do I add the column? I'll come and say Control Shift plus. I'm holding on there, Control and Shift. I would want to add the column. I would want to add a new column. So I'll come and say there 0, 0. So then could you kindly tell me the demand at the end of year 1? I've forgotten my figure. Was it 35 units? My figures are in thousands. The demand for year 1, was it 35? How do I make the formula go to other cells? By dragging. You ask this question very late. I'll come back to it. So in this case here, end of year 1 is 35. How about end of year 2? Can somebody give me the end of year 2? Those demand figures, you guys are able to see them. You guys are lucky. You are able to see them. 40, alafu ingine ni ngapi somebody? 40. Alafu ingine ni ngapi somebody? 50. Alafu ya mwisho ni ngapi? 25 Cleophas. Thank you very much. Great. Thank you very much. Now then, these guys have given us something there. They have given us price. Are you able to see the price? Are you able to see the price? They have given us price. They have given us price. Is there somebody who can see the price figure?
Is there somebody who can see the price figure? Is there somebody who can see the price figure? They are not talking to me. The price figure is 12. So this price figure of 12, do I put it under 0 or do I put it under 1? This price figure of 12. You know, for demand, they gave me under year 1, year 2, year 3, year 4. But the price figure, they have told me 12, but they're not very clear on where I should put it. Where should I put this price of 12? Oh, yeah. Under year 0 or under year 1? Oh, yeah. Oh, yeah. Aki, oh, yeah. Oh, yeah. Year 0, yes, you're right. It's year 0 simply because if this gentleman, Patrick, was to share the book again, Patrick, please don't get tired. Just share the book with us again, Patrick. You realize that they have told us that the price, variable cost, and fixed cost, all of them are in current value terms. Current means today. And I want to believe that this gentleman called Patrick can point to us where they're telling us the last sentence in paragraph 2, where they're telling us selling price and the costs are all in current price terms. Thanks, Patrick. Thanks, Patrick. Current means today. Current means today. So could you kindly stop sharing? Current means today. Current means today. So in this case, then I will come here right away, and then I will be able to put 12 there today. And then, ladies and gentlemen, these guys, they have the increments here. They have the increments. Fortunately, even if you don't have space up here, if you don't have space up here, what do? You can add rows, you can add columns. Like to add a row, I'll simply come, for example, here, highlight the whole of this. When I highlight it, I will say Control Shift Add. So I can add as many as I wish to create more space. So like now here, I need what we call the growth rates. I need what we call the growth rates. The growth rates like that. So these growth rates, these guys have given me for price. So price, they have told me it is 3%. Price, they have told me it is 3%. Price, they have told me it's 3%. How about variable cost? They have also told me the growth rate for variable cost. Is there somebody who is able to see the growth rate for variable cost? Is there anybody who is able to see the variable cost growth rate? How I wish you guys have the book there. You guys have the book there. Those percentages are given there. You can easily pick them from there. You can 4%. Thank you very much. 4%. So 4%, 4%, 4%, and then we have the last growth rate for fixed cost. Fixed cost. Is there anybody who is able to see the one for fixed cost? Is there anybody who is able to see the one for fixed cost? Abracadabra. Anybody who is able to see the one for fixed cost? Oh yeah, akiniko peke yangu. Oh yeah, oh yeah, oh yeah, oh yeah, oh yeah. So in this case here, fixed cost, ladies and gentlemen, fixed cost, ladies and gentlemen, fixed cost, ladies and gentlemen. What are they able to tell us here for fixed cost? So we have 6%. Thank you very much. So 6%, 6%, 6%, 6%, 6%, like that. Yeah. Sasa end up appear to party a variable cost. To party the variable cost value given, which is current. What is the variable cost value given? What is the variable cost value given? What is the variable cost value given? Variable cost value given. They are telling me it is 7.8. They are telling me that this is 7.8. 7.8. So from there, ladies and gentlemen, we have a fixed cost. Are you able to see the fixed cost value given? Fixed cost value given. Fixed cost value given. 25,000 current, like that. Yeah. Sasa nataka tutafute year price increment. So the price increment, what do? There is a big shortcut here, but I'll not go the shortcut way because I know most of you have not understood this multiplication table. So if I complicate it a little bit, all of you will hate me. I don't want you to hate me. But remember the formula which I'm using here then tonight is amount equals principal into 1 plus. This makes me happy because there is a student who was not able to get something here, and then they asked a question. So now I'm getting a chance to answer the question. I feel very happy whenever I answer questions. Raised to power n, raised to power n. So we start with this, ladies and gentlemen. We start with this, ladies and gentlemen. So I'll come and say equals, then I'll pick this 12. What do you know of this 12 when I move forward? When I move forward, what do you know of that 12? That 12 when I go to year one, the 12 in this case here, the 12 is the original amount. It will not keep on changing. So this one I have to F4 it. I must F4 it like that. And I say times. I come and say open bracket. I say I'm following this formula. One in this case here times 1 times the rate, the price growth rate is 3%. This 3% will not be changing. It is F4. And then I'll be able to do what here? To close these. And then I'll be able to raise these to the power. N is the period. And here now we are in period 1, like that. Then I say control, enter. Control, enter. There is something in this case that I've done, which is what here, a bit stupid. And I don't know which one is that, but I can easily know. It can't be 0.36. That one I'll know. I'll come and press F2 to bring up the formula. When I press F2, I'm able to see here, stupidly, instead of saying a plus, I have a multiplication. So I'll come and rectify. So I'll say plus there. And then I should be able to say control, enter. Great. 12.36. And then I should be able, ladies and gentlemen, in this case here, to come and do what here? I should be able to come and just copy this to year 4, like that. Let me know whether there is anybody who has been able to reach there. Let me know whether there is anybody who has been able to reach there. Let me know whether there is anybody who has been able to reach there. Abracadabra, abracadabra. Is there anybody who has been able to reach here? Really, really? How comes in this case here, I'm the only one? In this case here, we're swinging, who is very happy. I think I'm the only happiest soul here. I'm the only soul in this case that is happy in this room. I'm so excited, you know, because Excel is the most, it is the best thing that I ever got to know. The best thing that I ever got to know. The best thing that I ever R represents that rate. Thanks for asking. That rate, the 3%, the growth rate, the growth rate. Puff is dancing. Thank you so much. Thank you so much. Anybody would want to ask a question before I proceed? Today, Eric Mugo Mureithi, you happen to be very silent. I don't know why. Eric Mugo Mureithi, you normally talk, but today I think it's quite P Nigani, the original price, this original value, the original value, this one here, 12, the 12, the original value, 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 the original value. Great, 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 great. Getting an error, rudi hapo kwa kudrag the formula. I'll be able to repeat, yes. Any period. So then, ladies and gentlemen, here, let me just come back here, say Control Z. So I'm here, I'll be able to say equals, this is the P. So P is the original value. So I'll pick this. And then I say times, because I'm following this, open bracket. Then I say 1, I'm following this. I say plus. The rate of growth of price is 3%. Then this 3% has to be fixed. If you don't fix, you'll get errors. You'll have to come and say F4, you fix it. And then now you'll be able to come and close there. You say raised. If you say raised to 1, for example, you type 1 there, you can't be correct because I would want to use the power of Excel of dragging. So I have to come and raise this 1 there. And then I should be able to say Control Enter like that. And then I should be able to come here, now put this thing here, and then you drag to the right like that. You drag to the right. Am I correct really? I doubt. If it's growing at 3%, it can't move that way. Those figures are not correct. Let me go back to my 12.36. So my 12.36, I would want to see how this has been done. So you can see here, I never fixed the 12. This 12 is not fixed here, E13. So I need to come and put my cursor there, and then I need to come and F4 it like that, Control Enter. So from there, then I should be able to come here and drag like that. Yes, yes. So now are we able to get this like Mercy Njoki? You ask this question, Mercy Njoki. An error even with an accurate formula. Uongo Faith aki uongo. Sababu, ebu share screen yako Faith, if you don't mind. Faith, ebu share screen yako kuonyesha. Umekosea hapo kwa kufix. Ebu Faith share screen yako. Faith. I'm using formula Speranza. I'm using the formula keyboard. Faith, ebu share screen yako tafadhali. Don't worry. Don't fear anybody. In this world, you look at me, I can even wake up, I can dance a bit. Don't fear anybody. Don't fear anybody. Don't fear. If you're fearing, then you'll never become even a cabinet secretary in this country. Thanks, Faith. Great. I think your internet is not very strong. I'm yet to see the screen, Faith. Yes. Yeah. Yes. Thank you so much. And I can see you've arranged this work very well. Sasa hapo, malume, finya F2. Tuone formula. Finya F2. Finya F2. 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 Finya to F2. Thank you so much. So then there, ebu toa kasa yako hapo. Naona. This is correct. See. Unaojeka times. Unapo after your cell, ujeka the times. After your cell $47. Unayo ukikosa kaka times kana kuramba times 1 plus this one is correct and I think everything else is correct. Sasa sema control enter. Sasa sema control enter, sema control enter. Haya. Ebu sasa drag. So go to the that rabbit there. Drag and then now you can dance a little bit, Faith. No, you don't drag like that, Faith. Yes. Now you can dance a little bit, Faith, because your answers are correct. Your answers are correct. Can we get someone else in this case here? They're again sharing their screen. Let's get someone else in this case here sharing their screen again. Please remember, sharing your screen is the best thing. Kosar, thank you so much. No, Kosar, stop sharing. Kosar, stop sharing because I can see already you have the answer. The ones who are sharing are the ones who haven't gotten. The ones who are sharing are the ones who haven't gotten Kosar. Uko juu. The ones in this case who are sharing are the ones who haven't gotten. Yes. Uko juu. Ule mwingine hajapata. Hebu share screen wewe. Share screen haraka ule hajapata bado. Share screen haraka. Oh, I can see what Mercy is trying to do. Kidogo. Ngoja kidogo to stop sharing. Kidogo tu. So then I would want to look for Mercy here. Mercy, ensure that you don't expose any secrets you could be having, because now I'm pinning your video. I want to pin. Mercy, are you able to share now? Ensure that you're only able to put your computer only on the camera. Okay. Great. So I can see there 0. Okay. Problem now, it will be very hard for you to. Yeah, I can see 0, 10, 10.3, 10, 12, 10 point something. Mercy, nikuulize swali. Ukiangalia hapo kwa chini hapo, unaona ukiangalia vizuri, nimejua Mercy. Shida Mercy anatumia laptop na anatumia simu. Mercy, ukitaka amani, tumia tu laptop direct bila kutumia simu. Don't use two gadgets. Utapata shida mingi. Kwa mfano kama mimi niko na shida ya macho, I can't read those figures exactly. Of course, I can see us trying to do it, but I cannot help, Mercy. I'm so sorry, Mercy. We shall overcome. So then, Mercy, I'll be able to remove the pin there. I'll be able to stop video. Great. Then I'll be able to put my video here. So someone else who has not been able to follow through should be able to share their screen. Please do fast. You can see it is 2140. Yakubu Mohammed, thank you very much. So I can see price there. Oh, okay. Thanks, Mohammed. Thanks, Mohammed. Great. So 200 year price at 12. So make up. I end up with a sema equals. Pick the 12. 12 fast. 12. I can see 12 there. Lock it. F4. Thanks, Cleophas. I'll be able to show you why. So in this case here, F4. Are you able to see F4? No, you have a F4. F4. Correlation functions go juu. F1, F2, F3, F4. You're not able to see F4. Ama computer nataka kufinya function F4. Weka manually. Enda mbele ya D, weka dollar. Enda mbele ya D pole weka dollar. You can say dollar shift 4. Mbele ya D, just click on D. Mbele, not hapo or nyuma. After equals, weka D. After equals, immediately after equals, weka dollar. Nope. After equals, normally nimesema equals. Before D. Because you see that dollar should really come before D and before 49. Uspanic at all. Enda tu mbele ya, no, umerab. Unfortunately, umerab. So, so go to that C, sorry. Go to this C. Put a dollar there. Oh, before C or after equals, just click there. After equals, click. After equals, yes. Then put a dollar there. Shift 4. At the left core 49. Core 49 weka dollar pia. Before 49. In between C and 49. Weka dollar. Great. So endelea safari. Sasa enda hapo mbele sema times. Open brackets for open brackets. 1 plus. Say 1 plus. That R of 3%. R uko juu tafuta ile R ya 3%. Tafuta R kunuko juu R uko umeandika R ya price ya 3%. Unaiona kweli price 3%. Yes, that one, yes. And that 3% must be locked. Again, put dollar before C and below 38. Before 38, I mean. Put the dollar before C. Yes, there. Yes, and also 38. Kwa 38. Imepotea. Unaongea hapo dollar between C. Ulikuwa karibu umalize. Karibu sana umalize. Weka hapo. C and 38. Because you also want 38 to be locked. Put a dollar there. Close brackets. Then raised is shift 6. Raised to 1. Ile 1 yuko juu ya time. 1 year time. 1. Ile time. Ile 0, 1, 2, 3, 4, 5. You umeandika 0, 1, 2, 3, 4, 5. Hiyo 1 umetoa wapi? Hii hapa, hii umeandika row number 44. Row number 44. Siku hiyo 0, 1, 2, 3. Row number 44. Hapo, yes. Enter. Aya, go. Oh, what happened? Rudi hapo kwa 12 tena. Wacha tuone formula. C49 into 1 plus C38 raised to D44. Oh, rounding off. I'm being told rounding off. Thank you very much. So end up kwa eka 12. Eka kwa 12. Hiyo 12 umepata saizi. Sorry. Sema enter. Yes. Thank you very much. Now you can use that angry rabbit and then you scroll the other side. Like Isa, tonight, please ensure that you know how to do what here. Ensure that you know how to lock using F4. You either lock using F4 or you press function F4. We don't want to do this thing manually. Then at least you have understood something. Then we have in this case here, so I stop you. I have Willy Velma. Okay. So in this case here we have, yes, equals. You pick that 12. I hope you are able to lock it. with F4. You press F4. Times, open brackets, yes. Times. Just relax. Usikuwe na wasiwasi Velma. Sisi tutakungoja. 1 plus. I hope you're able to see the formula. 1 plus R. 1 plus R, that, oh, is it my battery? No. 1 plus, that 3% your price. And that 3% must be locked, isn't it? F4. Close. Raised to that one time period, EO. Now you see Techno, you have also benefited. Now you say enter, control enter, control enter, control enter, control enter. Then now you drag. No. Drag pole pole. Usi drag chini, ala. Don't double click. Okay, double click. Sema control Z. Control. Yes. Now you take it to the right. You drag slow. You drag to the right. Ala. Una hold kwa mouse. Una hold mouse chini. No. Una hold mouse chini. Mouse pad. You see the mouse pad? Unashikilia mouse pad na left hand, na drag na right. Yes, great. Pako umekasirika umeenda paka kwa then thank you so much. We shall overcome. Now, ladies and gentlemen, listen. Cleophas, already you have the answer, please, Cleophas. Unless you have a question, please, in the interest of time, Cleophas, allow me to move to something here in the interest of time. Oh, you wanted to show us how you got without locking. We shall be locking throughout, Cleophas. I'll show you also that one. You see, like now going down, I can use a shortcut, but I don't want to show you how to use this shortcut tonight. So come here and say this variable, I'm using this formula, say 7.8. So this 7.8, I should be able to lock it, F4. I say times, open bracket, I say 1 plus, in this case here, the variable growth rate, which is 4%, then that has to be fixed, F4, F4, like that. And then we say, ladies and gentlemen, raised to. So raised to, I'm picking year 1, like that. I say control, enter. And then I should be able to, in this case here, do like this. Fixed cost the same, equals. I pick this fixed cost. I lock it first. And then I say times. I say, in this case here, open bracket, I'm using this formula over P, 1 plus R. So we have here 1 plus R, 1 plus R, raised, no. First of all, lock this, raised to, in this case here, this one, right? Control enter. And then I should be able to do what here? To take this. So let me know whether there is anybody who has been able to reach where I have reached. Let me know whether there is anybody who has been able to reach where exactly I have reached. Ladies and gentlemen, anybody who has been able to reach where I have reached. Anybody who has been able to reach where I have reached. Great. Alafu ile kitu nafaa kujua, please, hata kama kitu inakaa mzito aje, utaelewa. That much I can assure you. Like tonight, you can cut on, sleep a little bit, and ensure that you watch the video. You will be able to understand. That one, trust you me. You should understand. So then, ladies and gentlemen, please listen and listen to me very well. Then what I will do, I will come here and introduce a new row. I will come here and control shift plus. No, let me introduce Malimbaya. I want to introduce it before fixed cost. So control shift plus. So this new row, I'm going to call it contribution margin. Contribution margin. Is there anybody who can remind us, ladies and gentlemen, how do we get contribution margin? Is there anybody who can remind us? The formula of getting contribution margin is price minus variable cost. Price minus variable cost, and I want to get contribution margins from year 1. So contribution margin equals, so I'll come in this case here, pick the price here, I say minus this variable cost like that. Control Enter, and then I should be able to drag this to year 4. Remember, this time 0 has got no meaning to us, apart from the benchmark, no meaning to us. So let me know whether there is anybody who has been able to do this contribution margin from your management accounting. We used to take price minus variable cost. Once you get contribution margin, which is contribution per unit, then you will need to get what we call total contribution. So come here before fixed cost, say Control, Shift, plus. All right. I'm able to hear myself. Okay, so then come here and say you are looking for total contribution. You are looking for total contribution. So total contribution, how do we get total contribution? It's very easy. You'll come and say CMX. It is contribution per unit times number of units. Take this to the next. Come and expand this cell. Always know how to expand the cells. I'll show you how here. So then what I'll do, ladies and gentlemen, here for total contribution, I will pick contribution for year 1. And then I say times the total number of units. This demand is my X. Control, Enter. Then I should be able to drag this to the other side. Great. There is a mistake I did. This fixed cost, they ought to have been in thousands. So no problem. I'll simply come here and delete those 3 zeros because they ought to have been in thousands. Once I do like that, I expect in this case here, this to behave. Then I should be able to do what here to just extend like that. So then before, what I'll do in the next class, I'll be able to repeat everything here. But I know what I'll now come and do is to come and get the profit. How do we get our profit? It's normally CMX minus fixed cost. I repeat the entire thing here. And please don't mind about this yet. Don't mind about this. So in this case here for profit, I'll come and say equals, I have my total contribution. I say minus the fixed cost there, Control Enter. I should be able to come and do what here, somebody like that. So remember that these profit are the initial profits that you get. So basically this will be the profits in this case here, as I'll be explaining later on. These are profits here before depreciation and any tax. Profit before depreciation, and I'll be able to subtract depreciation. I'll be able to do abracadabra until I get cash flows, which now I will be able to use to get what we call net present value. So ladies and gentlemen, I know today has been a crazy day. So I know today, ladies and gentlemen, has been quite a crazy day, but trust you me, you have gotten some key skills, which if you happen to practice a little bit without